Welcome back to the deep dive. I sometimes feel like these financial reports, they're written in some kind of secret code. All these numbers and this jargon, but we're going to try to crack the code today together. You sent us Infosys Q3 FY25 report, and I got to admit, some of it had me scratching my head a little bit, but luckily I've got our expert here with us to help us kind of unpack it all.
Yeah, you're not wrong. Those reports can be pretty dense,
Yeah.
but they do tell a story. And it's a fascinating story about a company's, health and where they're going. So today we'll uncover that story for Infosys and see how it reflects what's happening more broadly in the tech world.
Okay, so let's jump into it. What is the headline news here? What stood out to you when you first kind of looked at their performance this quarter?
Well, the revenue growth is pretty impressive right off the bat, 7.6% increase year on year in INR terms. But what I think is more interesting is the 3.9% growth in constant currency. That means that they're not just, riding a favorable exchange rate, they're actually winning more business globally. And that's even with all the uncertainty that's going on in the market.
Yeah, that's a good sign. It means they're not just surviving, they're actually thriving in what is a pretty tough environment right now. But revenue isn't the whole picture, right? Strong revenue doesn't always mean a company is actually healthy. What about their profitability? Are they making money efficiently?
Yeah, so that's where I think things get really interesting. Their operating margin stayed pretty steady at 21.2%.
Yeah.
And to me, that says they're keeping costs under control, even as they grow, which is a really important balance to strike, for sustainable growth. And their earnings per share, those also jumped by a pretty healthy 7.7% to hit 47.52.
Okay, so they're growing revenue, they're maintaining that profitability, they're boosting those earnings per share. It sounds like they've got the magic formula going on here. But what's driving that? Is it just, right place, right time? Or is there more to it?
Well, they're definitely riding the digital transformation wave. But I think they're also paddling pretty hard. The report really highlights how much they're focusing on AI, cloud computing, agile digital solutions. And, all these things that companies are just scrambling to implement
Right.
right now. But what's really interesting is that they're not just selling these as like separate services. It's more like they're weaving them all together into these comprehensive solutions that can really transform a client's, whole operation.
So it's not just like selling tools, it's more like selling transformations. And it seems like the clients are buying it. Because you mentioned they had some pretty impressive client wins. What's the secret sauce there?
I think it's a few things. They have the technical expertise to actually deliver on what they're promising. But also, it seems like they're building really strong relationships. They're going beyond just delivering a project and becoming more like trusted advisors.
Hmm.
And they're also getting recognition for what they're doing. The report mentions the several awards they've won, and that kind of adds credibility. And it probably attracts even more clients.
Yeah, it's like a stamp of approval from the industry. But I always like to peek under the hood a little bit, see how solid the financial foundation really is. What can you tell us about their balance sheet?
Well, it's a picture of stability, I'd say. They've got total assets of 139,486 crore, which dwarfs their liabilities of 50,818 crore. So they're in a really strong position. And they're not just sitting on a pile of cash either. They're actively managing financial risks,
Yeah,
especially in areas like foreign exchange exposure and interest rate fluctuations.
that's good to hear. Especially with how uncertain everything is economically right now. But, even the most financially sound companies can face some unexpected challenges. And this McCamish cybersecurity incident definitely caught my eye.
Yeah, that was a big one. It's a reminder that even these giants aren't immune to cyber threats. The report acknowledges a data breach at their subsidiary McCamish. It involved unauthorized access and data being taken. That led to legal action and, some reputational damage.
Yeah. Yeah. Data breaches, they're like the modern day boogeyman for businesses. So much damage can be done. What kind of data was actually compromised in this? And what steps did Infosys take to address it?
Well, the report doesn't get into specifics about the type of data, but it does say that McCamish handles personal data for corporate clients. So it could be pretty sensitive stuff.
Hmm.
I think it's important to note that they did act pretty quickly. They brought in cybersecurity experts to investigate and to fix the issue. They also got a third party to handle notifications and credit monitoring for anyone who might have been affected.
So it seems like they didn't just try to sweep it under the rug. They took some concrete steps to contain the damage and help people.
Right. But the legal stuff is still ongoing. There's a class action lawsuit that's pending, although it's currently stayed during mediation. So this raises questions about how much it could cost them financially and the long-term consequences for their reputation, especially in an industry where trust is so important.
Yeah, this incident really highlights just how high the stakes are with cybersecurity these days. But let's shift gears for a minute. You mentioned these employee stock option plans that Infosys has, and they seem pretty intricate. Can you explain why they're so complex and what's the purpose?
Oh, it's actually a pretty clever strategy, I think. They offer a mix of performance-based and time-based stock options. It's kind of like a win-win. It incentivizes employees to help the company succeed, but it also helps them attract and keep top talent, which is really important in such a competitive industry. It's kind of like a way to align everyone's interests towards growth.
So it's not just about compensation then, it's about building this shared stake in the company's future. But how do they actually work these plans? What kind of impact do they have on the employees and the company's overall financials?
So imagine it like this. Employees get the right to buy company stock at a certain price in the future. Now, if the company does well and the stock price goes up, their options become more valuable. And that can be a really powerful motivator. And a big chunk of their compensation.
Yeah, it sounds like it could be a game changer for attracting and retaining those really talented people. But I imagine it also has some implications for how the company reports their financials.
Oh, absolutely. There are accounting things to consider, especially when employees actually exercise their options. It can dilute the value of existing shares and impact the company's earnings per share. So it's a bit of a balancing act
Mm-hmm.
between rewarding employees and managing the company's performance for those shareholders.
So these stock option plans, they're more than just a perk. It's really a strategic tool with implications for both the talent and the financials. We've covered a lot of ground here, from their impressive growth to that McCamish incident and these really interesting stock options. But before we move on, I want to kind of take a step back and consider the things that often get overlooked, the behind-the-scenes aspects of financial reporting.
You mean like critical accounting estimates and recent accounting pronouncements?
Exactly. That stuff feels a little bit like a black box to me.
Yeah, I get it. They are crucial elements in shaping how companies report their financials, but they're often hidden in the fine print. And understanding them can really help you see the nuances behind all those numbers.
That's what I'm hoping to uncover. So let's take a closer look at those often overlooked aspects when we come back for part 2 of our deep dive.
Welcome back to the deep dive. We're really going to dig in deep now into Infosys's Q3 FY25 report, and we're venturing into the territory of critical accounting estimates and recent accounting pronouncements. To be honest, I find this stuff a little bit intimidating. It's like I'm stepping into a secret society accountants or something.
I understand. These concepts, they can seem like a foreign language if you're not familiar with them, but they're really important. If you want to understand the full picture of a company's performance, it's kind of like learning the grammar rules of financial statements.
Okay, grammar rules, that helps. So
Yeah.
let's start with these critical accounting estimates. What are they, and why should we even care? So basically, they're informed guesses that companies have to make about things that are going to happen in the future. That they don't know for sure. For example, the useful life of an asset, the likelihood of actually collecting on a receivable, or like in the case of Infosys, the fair value of what's called contingent consideration for acquisition.
So it's not all black and white. There's some gray areas, and that's where these estimates come in. But how much can these estimates actually impact the numbers that are being reported? I mean, could they potentially make a company look better or worse than it actually is?
Well, absolutely. If a company's estimates turn out to have been too optimistic, then yeah, it can inflate their reported earnings and assets. And on the other hand, if they're too conservative, that can lead to lower reported earnings. And understated assets.
So it's a bit of a balancing act then. They need to make reasonable estimates based on the best info they have at the time. But there's always that potential for these judgments to affect the picture that's being painted. And speaking of things that can shift the landscape, what about these recent accounting pronouncements? Those sound a little ominous to me.
Think of them like updates to the accounting rulebook. You know, the accounting standards, they change over time to reflect changes in the business world and to try to address new issues that are cropping up. And these pronouncements, they can have a big impact on how companies actually report their financials.
Can you give us a concrete example of how these pronouncements might affect how Infosys reports things in the future?
Sure. One example would be the new lease accounting standard. This requires companies to recognize most of their leases on their balance sheet. And before this, a lot of leases were treated as operating leases, and they didn't show up on the balance sheet at all, which made a company's financial position look better than it actually was.
Oh, so it's like bringing those hidden liabilities out into the open.
Ex-
That makes sense. But how does Infosys stay on top of all these changing standards? It seems like a lot to keep up with.
Well, they have a whole team dedicated to monitoring and implementing these new accounting pronouncements. They really have to stay ahead of the game to make sure that their financial reporting is always complying with the latest standards.
Well, that's reassuring. It sounds like they're taking it seriously. But I want to go back to the McCamish incident for a second. We talked about the technical steps they took to address that breach, but I'm curious about the bigger picture implications for Infosys. What kind of damage are we talking about to their reputation?
That's a really important point. Data breaches can really erode trust and tarnish a brand's image, and especially for a company like Infosys that relies so heavily on its reputation for security and reliability.
Right. In the tech world, trust is everything, and this incident could really make some potential clients hesitant about trusting Infosys with their sensitive data.
Absolutely. It raises concerns about their cybersecurity protocols
Hmm.
and their ability to really protect that client information. They could end up facing more scrutiny from regulators and potential clients and even investors.
So the financial impact of this incident, it could go way beyond any legal settlements or fines. It could affect their future business prospects too.
Exactly. The reputational damage could have long-term consequences
Yeah.
that they'll really need to address.
Okay, so speaking of things that need to be carefully managed, let's circle back to those employee stock options. They seem like a great way to motivate people and align everyone's interests. But are there any downsides?
Yeah, there are a few things to think about. One is dilution. When employees actually exercise their stock options, it increases the number of shares that are out there, and that can dilute the ownership stake of the existing shareholders and potentially lower the value of their shares.
So it's like adding more slices to the pie, but each slice gets a little smaller.
Yeah, that's a good way to put it. Another potential downside is volatility. The value of those stock options can go up and down a lot
Hmm.
with the stock price, which can make earnings less predictable.
Okay, so there are some trade-offs to consider, but overall it seems like Infosys is using these stock options strategically to try to balance those employee incentives with the interests of their shareholders.
They are. And it's worth mentioning that these plans can get really complex with different vesting schedules and performance metrics and other things that can affect their value.
It reminds me that compensation, it's more than just a salary. It's really a whole ecosystem of incentives and rewards.
And in a job market that's as competitive as this one, companies really have to be creative and strategic with how they compensate people to get those talented folks in the door and keep them there.
Now, I want to touch on something that really stood out to me, Infosys's free cash flow. We talked about it briefly before, but it deserves a closer look, a 91.9% year-on-year increase. That's not something you see every day. So what's driving this incredible surge in cash flow?
I think it's a testament to their operations and how efficient they are and their focus on actually generating cash from their core business. So first of all, they have that strong revenue growth, which is a major factor. More business means more cash coming in.
Makes sense. But revenue is only part of the picture, right?
Right. They've also done a really good job at managing their working capital. They're collecting receivables quickly, keeping inventory levels low, and strategically managing their payables. So cash isn't just sitting around tied up unnecessarily.
So they've basically optimized the flow of cash through the entire business.
Exactly. And on top of that, they're being careful with their capital expenditures, investing strategically in those growth areas, but keeping an eye out for any spending that's not really necessary.
Okay, this all sounds like a recipe for success. But what does this high free cash flow actually mean for Infosys? What can they actually do with all this cash?
Yeah, it's like they've got this treasure chest full of possibilities. So what can they actually do with all this cash? Like a splurge on a company-wide vacation to the Maldives or something. Probably more strategic than that. Although I'm sure the employees wouldn't say no to a trip. This free cash flow gives them a lot of flexibility. They could reinvest it back into the business, maybe expand into new markets, or develop some cutting-edge technologies.
Yeah, that makes sense. You got to stay ahead of the curve in tech. Constant innovation.
Right. They could also use it for acquisitions, buy up smaller companies that have some specialized expertise that would complement what they're already doing.
It's like they're playing chess, strategically positioning themselves for the long game.
That's a good way to put it. And we can't forget about the shareholders. They could use that cash to increase dividends.
Yeah.
Or buy back some shares, or both, which would increase the value of those existing shares and keep those investors happy.
So they've got a lot of options. Growth, expansion, rewards. It's really interesting to see how it all connects, from those digital transformation efforts to their financial management and even those compensation strategies.
It shows that a company's performance is not just about the numbers. It's about making smart decisions, managing risks, and being able to adapt to a world that's always changing.
Okay, so we've covered a lot in this deep dive. From Infosys's really strong financial performance to those challenges with the McCamish incident, we've also talked about those stark options to attract talent and their impressive cash flow.
We saw how they're embracing digital transformation, managing those financial risks, and navigating that complex world of accounting standards and all those evolving business practices.
But what does this all mean for our listeners? What's the key takeaway here?
Well, I think it highlights how a company can really thrive in a world that's changing so fast by being agile, adaptable, and financially savvy. Infosys shows us that success comes from a bunch of different things, focusing on innovation, putting the client first, and really understanding both the opportunities and the risks.
And I think you could argue that maybe the most important thing is that even in the middle of a tech revolution, sound financial management and sticking to those ethical practices, those are still the most important things.
Couldn't agree more. They're not just riding the wave of digital transformation, they're steering the ship, making those strategic choices. That set them up for sustainable growth and success in the long run.
Well said. It's been a really interesting deep dive, and I hope you, our listener, found it both informative and maybe got you thinking a little bit. As always, we encourage you to keep digging, ask those questions, and think about how all these trends are affecting the business world and beyond.
Until next time, keep driving deep.